learn with joy.
Hi, hello champions. Good morning. In this video, I am going to discuss cost and management accounting RTP MCQ questions of May 2025. Okay, now totally 7 questions given. Out of 7 questions, first question is too lengthy question. Conceptually, it's not that difficult, but just the institute is trying to test our patience level. Nearly 3 pages the question has been given. Based on that, the MCQs has been given. Okay, now without wasting time, let us start with that. Look at the question. Okay, wherever there is some important points that I'm going to highlight. Now look at this. Mr. Lindy is a German national who came to India again on 1st April 2024. So he came back to India on 1st April 2024. Basically, he's a German national. I mean, he came back to India means what is the meaning of that? In past, he would have came to India and he would have left the India. So in 1st April 2024, remember the date. Remember the date. 1st April 2024, he came back to India. Next, he presents his company and wants to start business in India as well. His company expertise in the manufacturing of industrial machines. Recently launched Make in India movement has motivated Mr. Lindy. Thinks that this might be the perfect opportunity for his company to establish his company in India. Actually speaking, from here to here, they given the story. Okay. Last, Mr. Lindy came to India on 1st April 2012. So last time when he came to India on 1st April 2012, he purchased a land for 50 lakh rupees. And this is the story happened on 1st April 2012. Simply I can tell you in 2012, he came to India and he purchased the land by investing 50 lakh rupees. Next, constructed a building by spending 16 lakh rupees. After that, he opened a private limited company in that building. He spent another 2,80,000 for this. He also employed 3 people per survey and to understand the need of Indian customers and spent 1,50,000 in the salaries. So please understand, Lindy came in 2012. Again, he came in 2024. In 2012, when he came to India, he purchased the land by spending 50,000 rupees and he constructed the building by spending 16 lakh rupees and he started the private limited company by spending 2,80,000 rupees and he has recruited few people to survey the market. For them, he paid the salaries. How much is the salaries? 1,50,000. This is the story happened in 2012. Okay, next. He was disappointed in the response of market who were importing everything from China back then. He closed the office and went back to Germany. So what happened? After spending all these things, he understood that Indian market is not going to suit for him. He closed the business and he went back to the Germany. All these years means from 2012 to 24, 2012 to 24, all these years the office was closed and only an amount of 12,500 per month was paid to the god and property tax was also paid. Property tax was paid on average 18,000 per annum, 18,000 per annum, whereas security guard is getting 12,500 per month. So all this year, what he's doing, he's paying, he's appointing one of the security guard to take care of the property, and in relation to that property, he's paying the property tax. Security guard salary is 12,500, 12,500 per month. When it comes to the property tax, it is 18,000 per year. Okay, next. Now, when Mr. Lindy is back, means in 2024, he back on 2024, he opens the office and starts to plan on how this time he will capture the Indian market. See, generally understand one thing. The people who have the passion of doing something, it won't leave them to have the peaceful sleep. So in this case, the same thing happened. Lindy again he came back to India to capture the Indian market. So after coming back to India, again he opened the office, which is started in 2012. Which is started in 2012. It is closed. It is closed for the 12 years time from 2012 to 24. It is closed. Okay, now expenses started to incur as soon as the office opened. So as soon as the office opened, expenses started. What are the expenses? Look at this. Salaries of staff 2,50,000 per month. Electricity, water, maintenance of office 50,000 per month. Security staff at 15,000 per month. So everything given per month. Lindy plans to purchase the land in Manesar. So actually this is in Haryana. This place is in Haryana in Gurgaon district. Again he is planning to purchase one more land. In 2012 he purchased. Now again 2024. In 2024 he planned to purchase land in Manesar which will be used for the factory. So he is planning to construct factory in the Manesar. As I told you, it is in Haryana and Gurgaon district. Okay, now after a search, he found an appropriate land and purchased a land for 1.5 crores. Now he is purchasing at what rate? 1.5 crores. He handed over the land to SPV company of a REIT to build a state-of-the-art facility for their factory. So he purchased the land and he handed over the land to one of the builder to construct the factory. Now, factory will be built in 2 years. The time taken to build the factory is 2 years. They will spend 85 lakh rupees each year for this construction. So please understand, he purchased the land in the Manesar by spending 1.5 crores and that 1.5 crores worth land has been handed over to the builder. Now builder is asking the time for 2 years time. He is asking for 2 years time to construct the factory. And every year, I mean, in the 2 years, they are going to spend 85 lakh rupees. They are going to spend 85 lakh rupees in the 2 years to construct the office. Clear? This is in 2024. Okay, next. Linde back to Noida office. Old office. Noida office in old. This is not specified earlier. The place, the name of the place is not specified earlier. Back to Noida office means he is having only 2 offices. He is having only 2 places now. Noida and Manesar. Manesar is in newly purchased land. Factory is not yet constructed. Back to Noida office means old office. Okay, now. Back in the Noida office, made 3 departments. He is structurizing the company. So he made 3 departments. What are the 3 departments? Office and administration, sales and marketing, accounts and finance. These are the 3 divisions. Now, expenses for this department except for salaries. Salaries already given. Salary details already given. Except for salaries are expected to be. So this is the expenses. Office and administration expenses 95,000 per year. Sales and marketing is 1,12,000 per year. Accounts and finance is 88,000 per year. Okay, now. Office overheads are to be bifurcated in these departments on the basis of individual spending ratio. Okay, so what they mean to say, whatever the expense incurred, office expenses, that will be bifurcated on the individual basis. Whatever the expense incurred to the from the respective department, that will be allocated to the same department. That is what the meaning of that. Next, this paragraph is story actually. What they mention, technology is developed in Germany, but at present its execution is not required. Therefore, they do not require any expert as of now, and also because the factory is not ready. So what they mean to say, but indirect information given, they mean to say that they do not require any expert as of now. They do not require any expert because the factory is not started. Okay, next. Mr. Lindy, being the only person representing his company and loan in Germany in the Indian office feels difficult to manage everything as he finds Indian corporate environment very challenging. He asked his company to deploy another German manager to India. So what is happening? He is thinking that alone he cannot capture the Indian market. He is asking their management to appoint one more general manager. He is asking the management to appoint one more general manager. Okay, now see here. This will cause the company to deploy another general. Okay, this will cost the company additional 2 million. 1 million equal to 10 lakhs. 2 million means 20 lakhs Indian national rupee per year, per annum. So if they recruit one more additional general manager, it cost the company 2 million, means 20 lakh rupees per year. Okay, next. To relocate this additional manager in India. Fine. The German management is divided on this decision. The one who disagrees say, so the German management is not agreeing for this. The one who disagreed, he stated that what he stated, Mr. Lindy is competent enough. Oh, Mr. Lindy, you are competent enough to run a small extension of our company in India. So they are feeling that, simply I can tell you, paying Lindy only, they are feeling more cost. How they can appoint one more person. Okay, next. We will allocate more resources to India subsidiary when actual operations will start. So what they meant to say, you start the operations first. You start the operations. We will relocate the people. That is what they mean to say. Till then, everything can be managed by Mr. Lindy alone. You have to manage alone. You start the operation, we relocate the people. Till the time, you have to manage alone. Next. Right. Indian company is itself a cost center, and we are already paying him 3.5 million Indian rupee annually. Paying him, who is him? Lindy. They are telling that we are already paying Lindy 3.5 million of Indian rupee annually. 35 lakhs. 35 lakh rupees is the salary of the Lindy. Next, that is per annum. Therefore, we are not ready to invest until it starts generating revenue. So they clearly stated, you start generating revenue, till the time nothing will be invested in the India. Next. Lindy has another opportunity to relocate the head office also to Manesar. So head office is at present in Noida. At present it is in Noida. Now he is rethinking. Let's relocate the Noida head office to the Manesar, where the factory building is being constructed. Wherever the factory building is constructing, at the same place you want to relocate the head office. The distance between head office and factory will reduce greatly. Super. If it is beside each other, the distance will be reduced, which will be highly beneficial when the factory will become operative. So what he mean to say, if you relocate, it will be high beneficial to the company after the operation started, because head office and factory side by side. Next, he will have to sell the old office in Noida. So if that be the case, he is planning to sell the office in the Noida. At what price? Which will be sold at 2.5 crores. He is planning to sell at 2.5 crores and purchase at what rate? 50 lakh rupees land, 16 lakh rupees building. Together come to 66 lakh rupees is the invested amount. He is planning to sell at what rate? 2.5 crores. There is a capital gains. Long-term capital gains. Why? It is happening in 2012. The transaction is thinking in 2024, 12 years time. It's a long term. Now, purchase and ready-made building in Manesar for 3.75 crores. What is happening? He want to sell the Noida property and purchase one of the property in Manesar for the head office purpose. He is planning to sell at what rate? 2.5 crores. And he is planning to purchase the office in Manesar at what rate? 3.75 crores. Are you understanding? Okay, now. This new building will have large space that can accommodate the furniture needs for space. When company will grow, okay, fine. It seems to be like perfect investment opportunity to Lindy. So he himself thinking that it is the perfect investment for the company. Okay, now expenses in this new building are expected to be. If we purchase the building, what is the expenses expected means? Salary staff 30,000 per month, electricity, water, maintenance office 80,000 per month, security 30,000 per month. Indexed cost of building in Noida is 2.25 crores. Indexation, income tax, capital gains. 50 lakh rupees is the land value, 16 lakh rupees is the building value, totally 66 lakhs. But indexation is applicable. According to indexation, it is 2.25 crores. And tax on long-term capital gains is 12.5%. We need to calculate capital gains and we need to pay it to the government. Next. On the basis of above information, answer the following 5 MCQs. So this is the information given. Let us consolidate once. What is the information provided in the question? Actually, the person called Lindy, he is from Germany. What he is doing? In April 2012, he came to India with the plan to start the business in India. When he came to India, he started investing in land. He invested in land 50 lakh rupees and constructed the building 16 lakh rupees to start the office, private limited company, 2 lakh 80,000 and 1 lakh 50,000 incurred for the survey. This is the expense incurred. After doing the survey, he realized that Indian market is not that easy to encash, so he returned back to the Germany. At the time of returning back, he didn't sell the property. He appointed one security guard by paying 12,500 rupees per month or 12,800. I'm not sure. Okay, 12,500 rupees per month, and every year he is paying the property tax of rupees 18,000 rupees. This is the story happened in 2012. Again, he came back when on 1st April 2024. He came back on 1st April 2024. He opened the office, which is purchased in 2012. After that, he is looking to start with the factory. He is planning to start with the factory. So he found the land in Manesar, and he purchased that property. He purchased the property, I think 2.5 crores. He purchased that property for that land for the 2.5 crores. Where is that? Sorry, 1.5 crores. Here it is. He purchased that land for the 1.5 crores, and that property has been given to the builder. Builder is given the quotation that 2 years will take the time, and every year we have to spend the 85 lakhs. Every year we have to spend the 85 lakhs. So he agreed for that 85 lakhs, and he given the contract. And then after doing this, the Lindy is thinking. And first of all, before that, what happened? Lindy has been asked the management to appoint one more general manager. Why he want to appoint one more general manager? He is thinking that it requires one more general manager to capture the competitive Indian market. But company has opposed that. Why? Because it costs the company 20 lakh rupees per annum. It costs the company 20 lakh rupees per annum, which the company is not ready to invest. You first start the revenue, then we'll relocate the people from the Germany. That is what the statement given by the company, because they're feeling that there is no purpose in investing money in India until we start the operation. Then what he thought, okay, fine, if it is not working, then what the Lindy did, he is thinking by himself that let us relocate the Noida office to the Manesar. If that be the case, he is thinking that he need to sell that property at 2.5 crores, and he need to relocate to Manesar. He is planning to purchase one big building which is costing 3.75 crores, and then they given indexed cost of the old property 2.25 crores. Indexed cost of old property 2.25 crores. Look at here, 2.25 crores. And then they give the capital gains tax rate 12.5%. This is the details given. This is the picture. Apart from that, operational costs given, office, administration, accounts, finance, those costs given, and salary details given. Let us get into the questions. Now look at the question. Find out an avoidable cost till factory becomes operative. What is its value? So in the entire discussion, what can be avoided is general manager salary or additional general manager salary. Remaining all the expenses are incurring purposefully, paying salaries to the survey or incurring amount purchasing the properties. All these things are doing purposefully. Nothing can be avoided. We cannot avoid anything. Salaries, expenses, investments, nothing can be avoided. What can be avoided is only one thing, that is 20 lakh rupees of general manager salary. That to additional general manager salary. We cannot avoid the salary of the Lindy also. He is getting 35 lakhs per annum. We cannot avoid that. What we can avoid is only salary of the additional general manager, 20 lakh rupees. Okay, 20 lakh rupees, and for how long time? 2 years time. Because it will take 2 years to start the factory. Or you understand what they are asking? Until become operative, it will take 2 years time. They clearly stated it will take 2 years time. So 20 lakh rupees into 2 years, 40 lakh rupees. So answer is D. If you understand the question, solving the MCQs is very simple. We have to spend time. We should have patience. We should have patience to study the entire case scenario. Clear? Next. Find out total sunk and shutdown cost. First of all, let us understand sunk cost, shutdown cost. What do you mean by sunk cost? We already discussed this. Sunk cost is the incurred in past, historical cost, or cost incurred in the past. That is called sunk cost. What is the past in this scenario? 2012. Whatever the cost incurred in 2012 is a sunk cost. What is the cost incurred? 50 lakh rupees towards land, 16 lakh rupees towards building, 2,80,000 for the starting the company, private limited company, 1,50,000 for the survey. I did the same thing. See here. First, sunk cost. Look at this. 50 lakhs, 16 lakhs, 2,80,000, 1,50,000. Together comes to 70 lakh 30,000. That is the sunk cost, historical cost. Next, shutdown cost. Let me delete this. Shutdown cost. What do you mean by shutdown cost? Cost incurred during shutdown. Cost incurred during shutdown the business. In this question, how many years shutdown happened? 12 years. 2012 he started, immediately he shut down up to 2024. The company shut down. During this 12 years time, what is the cost incurred? 12,500 rupees to the security guard. For how many months? I mean, per month is there. So into 12 months, you'll get per annum. Into how many years? 12 years. Next, property tax, 18,000 rupees. Understand that 18,000 rupees is per annum into 12 years. Look at this. Security guard, 12,500 into 12 months into 12 years, 18 lakhs. Property tax, 18,000 into 12 years, 2 lakh 16,000. Together comes to 20 lakh 16,000. They are asking, look at the question. Find out total of sunk cost, total of shutdown cost. Just now we calculated. In the given case study, select the correct option from below. So correct option from below, if you check there, they given the total summation. They given the summation. How much is the summation? 90 lakh 46,000. 90 lakh 46,000. D is the option. All of you clear about this? Next. What is the total out-of-pocket cost for the company in Noida branch after factory land in Manesar is purchased till the factory operation begins? So please answer what they are asking. Out-of-pocket cost for the company. Out-of-pocket cost for the company in Noida branch after factory land in Manesar is purchased till the factory operation begins. See what they mean to say. They are asking what is the cost in Noida branch. What is the cost in Noida branch if they continue for 2 years time? Why? Because after the land is purchased, land purchased when 2024, land purchased on 1st April 2024. So after that they are asking what is the cost in Noida office. Now till the factory operations begin. Now the point is here slightly confusing. What is the confusion, sir? He is planning to relocate the Noida office to the Manesar. Then how come the expense can be incurred in the Noida? See, please understand that is a planning to shift the office, but not yet shifted. Yeah, but they given the information, they given the entire details. Look at the question. Another opportunity to relocate the head office. Also, Manasa, the factory building is being constructed. So what they see, this is the thinking of the Lendi. Lendi is thinking that to relocate the premises from Noida to Manasar. I don't know, haven't happened. So what they are asking, if suppose Noida office continues, what is the operational cost incurred after purchase of land? Means from 2024 till 2 years. What is the expense incurred? Look at here. The moment the office is opened, he started incurring. Look at here. This is the point. Expenses started incur as soon as office is opened. What is the expenses started? Look at this. Salary of staff. Salary after 2 lakh 50,000 per month into 12. Electricity water 50,000 per month into 12. Security staff 15,000 per month into 12. Into 12 will hit per annum into 2. 2 years into 2. 2 years into 2. 2 years. Are you understanding? All of you? Okay, now look at here. I took the total. Of these three. Instead of taking total, I took the total. 2,50,000 plus 50,000, 3 lakhs plus 15,000, 3 lakh 15,000. Apart from this, they given the office and administration, sales and marketing, accounts and finance. 95,000 per annum into 2 into 2 into 2. Individual amounts, we'll take that. Look at here. 3 lakh 15,000 into 12 into 2 into 12 to convert per annum into 2 to take it for 2 years. 75 lakh 60,000. 2 lakh 95,000 into 2. 5 lakh 90,000. 3 lakh. This is the total. Total of this. If you make a total, 2 lakh 90, just to avoid the computation, I'm taking this. Okay, I'm taking the total. 2 lakh 95,000 into 2. How much it comes to? 5 lakh 90,000. Now what they are, look at this. Out of pocket cost for the company in Noida branch after factory land in Manesar is purchased till the factory operation begins. So till the operation begins, what is the cost in Noida? So if that be the case, we have to consider only these two things. But what they given in this question, look at this. They are taking salary of the Lindy. They paid the salary to the Lindy. What is the salary? 35 lakhs into 2, 70 lakhs. They are paying salary to the Lindy also. That is also one of the operational costs. So 35 lakhs into 2, 70 lakh rupees. Are you understanding? Apart from that, they are incurring expenditure to construct the factory. So this one thing, see, they are asking out of pocket cost. They are not asking only expenses, out of pocket cost for the company. Entire cost we have to incur, irrespective of the expense and asset creation. They are not asking expense, they are asking the entire cost incurred, total amount incurred. One is salaries to the staff. Number two, administration expenses. Number three, Lindy salary. Number four, expense incurred to construct the building. Out of pocket cost. So these are the cost elements. So 85 lakhs into 2, 1 crore 70 lakhs. Total comes to okay. Now listen to me carefully. Let us read this sentence again. We need to get certain clarity here. The point is they are asking what is total out of pocket cost for the company in Noida branch after factory land in Manesar is purchased. After the factory land is purchased. After the factory land is purchased, what is the cost possible? Factory land is purchased already, so we are not going to take it as cost. So after that, they are asking after purchasing the land, what is the cost possible? What is the cost incurred? So you should not consider the land cost. So exclude the land. Apart from land, what they are incurring? Paying salaries, incurring administration cost, understanding paying salary to the Lindy, and they are incurring expense to construct the factory. All these things has been considered. So 35,000 into 2, sorry, 35 lakhs into 2, 70 lakhs, 85 lakhs into 2, 1 crore 70 lakhs, together comes to 3 crore 21 lakh 50,000. Option A. Option A. Are you understanding? All of you. So they are asking what is the cost incurred after purchasing the land. So don't consider the land cost. So after purchasing land, what is the cost means? All other expenses. Lindy salary, expense incurred to construct the factory. All of you clear about this? Okay now. What will be the out of pocket expenses incurred in relocation of head office to Manesar? So this is one more important point. So what is the situation here? Relocating from Noida to the Manesar. Relocating from Noida to the Manesar. What is the out of pocket cost? Where is how to calculate this? Very simple. So first of all, they purchased the building. They purchased the building in the Manesar by paying how much? 3.75 crores. To purchase that 3.75 crores worth property, they sold the Noida property. Noida property sold at what rate? 2.5 crores. Understanding? But on that, they need to discharge the capital gains. So after excluding capital gains, see, I'm getting 2.5 crores. Entire money does not belongs to me. From that money, something has to be given to the Nirmala Sitharaman madam. She is waiting to collect the capital gains. Are you understanding? So look at here. So 3 crore 75 lakhs is the land and building, sale of old building. 2.5 crores is the sale value minus capital gains. Difference between these two is the capital gains. Difference between 2.5 and 2.25 is the capital gains into 12.5% will get the capital gains. 2.5 crores minus capital gains, you will get 2 crore 46 lakh 87,500. Understanding? What is the amount invested from hands? 1 crore 28 lakh 12,500. So B is the answer. Situational wise they are asking. Situational wise they are asking. Okay, next. How much is the unexpired cost of Noida office as on 1st October 2024? See, unexpired cost. First of all, we need to understand what is unexpired cost. There is one classification called as the expired cost and unexpired cost. Expired cost means the cost which is charged against the sales. In simple words, the cost which is reduced from sales. Purchases, expenses, salaries, rent, whatever the cost reduced. Whatever the cost reduced or net off or charged against the sales, we will be calling it as the expired cost. Whichever the cost carry forward to next accounting period, or which is not going to reduce from the sales, which is not going to reduce from sales, we will be calling it as unexpired cost. Are you understanding? So they are asking unexpired cost means what is the cost that is not reduced from the sales. Listen. How much is the unexpired cost of the Noida office as on 1st October 2024 if salaries to all the employees are paid till 31st March 2025. So they are asking as on 1st October 2024. But salaries is paid till the date of 31st March. That means for the 1st October see they are asking as on 1st October. As on 1st October means 6 months salaries paid in advance. 6 months salaries paid in advance. Because October, November, December, January, February, March. That is the unexpired cost. That is unexpired cost. Because that is going to expire in the remaining 6 months' time. That is unexpired means that is see as on 1st October 2024, it is an advance salaries. Advance salaries we are going to treat as current asset. We are not going to net off against the sales. We are not going to transfer to the P&L. We will account it as advance salaries or salary paid in advance. Are you understanding? Okay, now look at here. Here, two things. Number one, salaries to all the employees. All the employees is here we take it 3,15,000 per month. 3,15,000 per month. We can take 3,15,000 into 6 months. Or else you can take 2,65,000. Oh, sorry. Small correction. Cut. Here the point is 2,50,000, 15,000. This is not a salary. So 2,65,000 paid to the staff and security. Paid to the staff and security. 2,65,000 into 6 months. We'll be getting 15,90,000. This calculation is wrong. Okay, fine. 2,65,000 into 6 months, 15,90,000, and then Lindy salary. 35 lakhs per annum. Just I'm dividing with 2. We'll get 6 months salary. So 17,50,000 together comes to 33,40,000. What is the option? A. That's the answer. Nearly half an hour has took to explain this question, but worth spending. Very big question. Just we need to understand the question. Unexpired cost means the cost which is not reduced from the sales as on 1st October 2024. Clear about this? Understanding? Remaining questions are simple. This one question will take time. Quickly revise the remaining questions. Look at this. Second question also slightly tricky only. Okay, now the Home Mart is the latest trending brand offering home improvement appliances with broadest selection of products with highly competitive prices. The sale is increasing year by year with huge multiplies. Current year also, the sales reached triple the last year. The reason being, company having good customer support where it provides after sales assistance over phone per item sold. Though it cost only rupee 1 per item sold to the company, it enhanced to 49,15,200 last year, making a huge impact on the total support cost. So actually they given the name of the company Home Mart, which is into the home improvement appliances. They are having highly competitive prices. They are having the product with the highly competitive prices. Ultimately, in this entire paragraph, what is the useful information means? This point is useful information. Though it costs only, okay, what it costs? See, they are giving some customer support, assistance, say after sales, assistance over phone. Simply I can tell you, assistance over phone. Assistance over phone, how much it costs? Rupee 1 per item. For every item sold. How much it costs? 1 rupee. In the last year, how much is totally? 49,15,200 in the last year. 49,15,200 in the last year, making a huge impact on the total support cost. Understanding? Okay, that is regarding the last year. Next. All the company appliances have been majorly categorized into 3 product lines, namely fancy fans, home decors, assembled furniture. These are 3 different products which is handling by the home mart. Okay, now during the current year, the company revenue as generated is 3 crore 80 lakh 88,000, 10 crore 8 lakh 28,800, 5 crore 80 lakh 75,200 respectively. However, The cost of goods sold, spell mistake. Cost of goods sold is 2 crore 88 lakh, 7 crore 20 lakh, 4 crore 32 lakh, respectively. Totally 3 products are there. For all the 3 products, they given the sales and they given the cost of goods sold. Sales minus cost of goods sold will get gross profit. If any other expense, if you reduce, we'll get the operating profit. Are you understanding? Okay, next. In business, there is a saying, the packing sells the product the first time, but what inside sells the product a second time. So they give one saying. What is the saying? Packet will sell for first time, but inside the product will sell for second time. Following the saying, the company has the policy of taking back the curtains of the product sold relating to fancy fans to reduce the packing cost. So packing is for first time. So what they mean to say is like whatever the product fancy fans once you sell the product, they're taking back the curtains, cardboard boxes. Curtains and cardboard boxes are they're manufactured with different items. One of the example is cardboard box. They want to take back the cardboard boxes or curtains from the customers. Now look at here, because the packing cost is increasing. Because the packing cost increasing, they want to take back the curtains now. However, for smooth returning of curtains, the company has to incur certain carrier cost on its own, which is 5,76,000 for the current year, and allocating the same directly to the said product. See this information, this paragraph is speaking about the fancy fans. Only product is fancy. There are totally 3 products, but this paragraph speaks about fancy fans. What they mean to say, fancy fans will sell by packing through cardboard boxes or curtains. They are selling the product and they're taking back from the customers. Take back from the customers, how much it is costing? 5,76,000 it is costing. It is costing 5,76,000. Understanding? And that cost will be directly assigned or directly allocate to the said product. That expense has to bear by the same product. And it's logical too. Okay, next. Some other information relating to each of the product line is provided below. Fancy fans, home decors, assembled furniture. They give number of items sold, number of deliveries, number of purchase orders, hours of shelf stocking. All these details given. Next. The company also provides the following basis for cost allocation. So, delivery, physical delivery and receipt of product. So, see, they given certain activities. 3 activities given. This question is based on the activity based costing. They given 3 activities: delivery, ordering, and one more activity is shelf stocking. Delivery, description of activity, physical delivery and receipt of product. That's fine. Total cost is 1 crore 20 lakh 96,000. Cost allocation basis 6,300 deliveries. Look at here. Number of deliveries given. If you make a total, it will be 1,000. Sorry, if you make a total, it will be 6,300. If you make a total, it will be 6,300. So, cost per delivery. We are calculating cost per delivery. Total cost is 1 crore 20 lakh 96,000 divided by 6,300, 1,920. Like that, ordering. Ordering cost per order is 2,400. Next, shelf stocking. Shelf stocking time is 480. This is the information given. Now, company wants you to figure out the following to ascertain which of the product line is more profitable. Okay, fine. See here. Question is very simple. There are 3 products. There are 3 products in the company. For all the 3 products, they given the sales and cost of goods sold, and then they given support cost details. Initially, one of the support cost is assistance over a phone. For each item, it will cost 1 rupee. In the last year, some 45 lakh rupees is the cost. Apart from that, what are the supporting activities? 3 more activities. Shelf stock, okay. Delivery, ordering, shelf stocking. These are one of the support activity to make the sales. These are one of the support activity to make the sales. Are you understanding? Okay. Let's continue. So, okay, customer care. Customer care is one of the support activity, and assistance. Customer assistance is one support activity. Ordering, shelf stocking, and then delivery. Apart from these 4, there is one more thing. Recorrecting the curtains, that is also one of the support activity for doing the business. What do you mean by support activity? Nothing but the activity which support to do the business. The activity which is support to do the business. So totally 5 support activities are there. Number 1, customer assistance. Number 2, ordering. Number 3, delivering. Number 4, shelf stocking. Number 5, taking back the curtains. Now look at the information. The company wants you to figure out the following to ascertain which of the product is most profitable. The total support cost. First, they are asking total support cost and its percentage to the cost of goods sold would be total support cost. Just make the total. See here. Delivery 1 crore 20 lakh 96,000. Ordering 74 lakh 88,000. Shelf stocking 82 lakh 94,000. Next, returning boxes 5 lakh 76,000. 5 lakh 76,000. When it come to here, look at here. 1 rupee per item sold. 1 rupee per item sold. This don't take this. Many students will confuse to take this. Don't take this. That is for the last year. That means last year number of items sold. Last year number of items sold is 49 lakh 15,200. This is the last year sales. This is the last year sales. But current year sales they given in the question. What is the current year sales? 12 lakh 9,600 fancy fans. 1 crore 5 lakh 98,400 home decors. 29 lakh 37,600 assembled furniture. Make a total. Make a total. Will be getting, see, assistance cost 1 crore 47 lakh 45,600. 1 crore 47 lakh 45,600 items sold into 1 will get the assistance cost. Apart from that, 4 more items. We make a total. 5 lakh 76,000, 1 crore 20 lakh 96,000, 74 lakh 88,000, 82 lakh 94,400. We'll be getting 4 crore 32 lakh. This 4 crore 32 lakhs against to cost of goods sold, they're asking the percentage. So, support cost divided by cost of goods sold, total cost of goods sold. Support cost is 4 crore 32 lakhs. 4 crore 32 lakhs divided by cost of goods sold, make a total of these 3 elements. Make a total of these 3 elements. Total comes to 7, 9, 13, 14. 14 lakh 40,000. Total comes to 14 lakh 40,000. Sorry, 14 crore 40 lakhs. 14 crore 40 lakhs. Okay, now let us take the percentage. Look at this, 4 crore 32 lakhs. 4 crore 32 lakhs divided by 14 crore 40 lakhs into 100. 30%. So answer is B. Answer is B. 4 crore 32 lakhs is the support cost and 30% are cost of goods sold. Clear? Next. Next. Look at this requirement. What they're asking. Operating income as a percentage of revenues of each product line, namely fancy fans, home decors, assembled furniture, when all the support costs are allocated on the basis of cost of goods sold. See, in case of activity based costing, only 2 types of questions possible. Number 1, calculating the operating income on the basis of traditional approach. Number 2, on the basis of the activity based costing. Here it is traditional approach because they are asking to take the base of cost of goods sold. How to calculate operating income in this case? First we'll take sales minus cost of goods sold of each product line. Each product line, 3 product lines are there. Sales minus cost of goods sold will be getting gross profit minus support cost. Minus support cost. What is the total support cost? 4 crore 32 lakhs. Here we calculated total support cost is 4 crore 32 lakhs. That 4 crore 32 lakhs we need to apportion between 3 product lines using cost of goods sold. Using cost of goods sold. If you take that, we'll be getting operating profit. Have you understand this? The proportion of cost of goods sold. The proportion of cost of goods sold here I written. Look at this. Now look at this. First I took sales. First I took sales. Cost of goods sold. Cost of goods sold proportion is we can divide with 1 crore 44 lakhs. We can divide with commonly we can divide with 1 crore 44 lakhs, so that it is 2 is to 5 is to 3. Proportion is 2 is to 5 is to 3. We'll be getting gross profit. How to get gross profit? Sales minus cost of goods sold, we'll get gross profit. Minus support cost. Support cost is totally 4 crore 32 lakhs. This 4 crore 32 lakhs divided between 3 items in the proportion of 2 is to 5 is to 3. Accordingly, apportion 86 lakh 40,000, 2 crore 16 lakh, 1 crore 29 lakh 60,000. So now we'll get the profit. Profit is 6 lakh 48,000, 72 lakh 28,800, 19 lakh 15,200. As a percentage, 6 lakh 48,000 divided by 3 crore 80 lakh 88,000 into 100, 1.7%, like that 7.17%, 3.30%. So which answer is suitable? Look at here. So just they're asking percentages. According to percentage, C. Answer is C. 1.70, 7.17, 3.30. Correct. Answer is C. Have you understand this? Okay, next. The cost driver. The cost driver rate relating to delivery, ordering, shelf stocking, and customer support would be. Sorry. First one we answer. Second one is done. Third one. The cost driver rate relating to delivery, ordering, shelf stocking, and customer support would be cost driver rate, means absorption rate. In our overheads terminology, absorption method terminology is absorption rate. How to calculate absorption rate? Overhead divided by base quantity. Here they'll be calling it as cost driver rate. In activity based costing, basis will be called as cost driver. Are you understanding? Cost driver rate. Cost driver rate. How to calculate this? Here I already written. Delivery is one of the activity. Total cost is 1 crore 20 lakh 96,000. Cost driver is deliveries. Number of deliveries. So per delivery 1920 per delivery. So same way per purchase order 1920 2400. Next per shelf stocking time 480. So answer is 1920 2400 and 480. And one more support activity is customer assistance. 1 rupee per item. Per item. So 1 rupee per item. Are you understanding? Now look at the answer. Answer is 1920 2400 480. 1920 per delivery, 2500 per purchase order. They're asking delivery 1920, ordering 2400 per purchase order, shelf stocking 480 per 480 per stocking hour, and customer support 1 rupee per item sold. So this is the first one is the right answer. No need to check with the remaining items. Okay, next. Operating income of each product line, namely fancy fans, home decors, assembly furniture, and all the support costs are allocated using activity-based costing. We are allocated using activity-based support cost, allocated using activity-based costing. How many support costs are there? 5. 5 support costs are there. Number 1, customer assistance. Number 2, returning back the curtains. Number 3, ordering, delivery, shelf stocking. Items sold. 1 rupee per item sold into number of items sold will get the allocation to the activities. Activity based, they're asking to apportion the support cost using activity based costing. We have to go activity wise. First activity is customer assistance. What is the base? Item sold. We'll take all the 3 products. First we'll take all the 3 products. First we'll take 1 rupee per item sold into number of items. We'll get cost. Curtains return. I already told you that is specifically for the, what is the name of the product? Fancy fans. That is specifically incurred for the fancy fans. Returning back the curtains that directly given to the fancy fans. Deliveries based on number of deliveries. Orders based on number of purchase orders. Shelf stocking based on shelf stock. Okay, now see here. I prepared one statement. Look at here. This is item sold. Customer support. This is customer support. not customer support, I'm sorry. This is deliveries. Delivery cost, this is ordering cost, this is shelf stocking cost, and this is customer assistance, and this is cartons. This is cartons. Make a total 51 lakh 84,000, 2 crore 82 lakh 24,000, 97 lakh 92,000. This is the support cost details according to activity based cost. Under traditional costing, cost of goods sold, here according to activity based costing, we are calculating the cost. Once we calculate this cost, we need to calculate operating income. How to calculate operating income? Look at this. This is the calculation. First I taken sales minus cost of goods sold, minus cost of goods sold, we get gross profit, minus support cost. Minus support cost, we'll be getting operating profit. This is what the answer. What they're asking ultimately? No, directly they're asking the values. They're asking the values. What are the values? 41, 4,000, 6 lakh, 4,800, 50 lakh, 83,200. Here it is. Answer D. Answer is D. Are you understanding? Next. Operating income as a percentage of revenue for each product line, namely fancy. Okay, fancy home decor assembly. When the support cost is allocated, okay, they're asking the same thing in terms of percentage. The same thing in terms of percentage. So have I calculated that? I didn't calculate. Fine, we'll calculate now. So 41 lakh 4,000 divided by 3 crore 80 lakh 88,000 into 100 equals to 10.77%. 10.77%. Is there any answer with 10.77%? Oh, here it is. I think B. B is the answer. Number 5, B. Just we can confirm with the one thing, one item only. Let us cross check that. Here it is. 10% divided by 8.75%. Clear? So by this we done with the first two lengthy questions. Remaining questions are small only. Let us complete fast. Done with the first two questions. Now look at the third one. Look at the third one. Employee cost and direct expenses, and this question is based on the row 1 and half-say. I already told you, generally I used to tell you that row 1 and half-say means first we need to identify 4 facts: time allowed, time taken, time saved, time rate. As I told you, close your eyes. Once you find the question based on row 1 and half-say, the first task is identifying these 4 elements: time, 4 elements, time allowed, time taken, time saved, time rate. Luckily, in this question, all the 4 details given directly. Look at the question. Mr. A works in a manufacturing company where he paid bonus according to the HALSE 50% plan. Besides the normal wages, the relevant data is as below: time rate 100 rupees, time allowed 10 hours, time taken 5 hours, time saved 5 hours. Mr. A believes that his bonus under HALSE system is getting reduced by 50%, thus intending to shift towards row 1 premium plan. You are required to calculate total earnings of Mr. A as per HALSE plan, row 1 premium plan. Enumerate reason for the difference in both the earnings. Reason for the difference in both the earnings. Now, first of all, we need to calculate earnings according to HALSE scheme and row 1 scheme. Look at here. According to HALSE scheme, what is the formula? Time taken into time rate plus 50% of time saved into time rate. Basic wages plus bonus. These two are incentive schemes. These two are incentive schemes where we need to calculate the bonus. Bonus according to HALSE is 50% of time saved into time rate. Bonus according to row 1, time saved to time allowed, time saved to time allowed into time taken into time rate. So accordingly, if you substitute the values, you will be getting 750. You will be getting 750. Let us take the row 1 scheme. Here also we are getting 750. Here also we are getting 750. So both the earnings are same. Now what they are asking, look at the requirement. Enumerate reason for the difference in both the earnings. There is no difference at all. Why there is no difference? That is what the question mark now. They are asking, whatever the difference, you enumerate the reason. Whatever the difference, you enumerate the reason. How to enumerate the reason? If you attended my classes. If you attended my classes, I already told you time taken to time allowed. Time taken to time allowed equals to 50%. Time taken to time allowed equal to 50%. Row 1 scheme earnings will be equal to Halsey scheme earnings. Row 1 scheme earnings equal to Halsey scheme earnings. How to prove that? Means, see, if you observe one thing, these two things. Let me clarify that. If you observe one thing, in case of Halsey, time taken into time rate. In case of row 1, time taken into time rate. There is no change in these basic wages. The difference happen in bonus. When these two will be equal, when bonus is same. When bonus is same under row 1 scheme and Halsey scheme, then only both will be equal. When it will be same, very simple. Let me show the derivation quickly. See, bonus under Halsey scheme equal to bonus under row 1 scheme. When it is means here. 50% of time saved into time rate is the bonus formula for Halsey scheme. Time taken to time allowed into, time saved to time allowed into time taken into time rate is the formula for the row 1 scheme. Now what I am going to do, I will cancel common items. Time saved, time saved, time rate. If you cancel that, ultimately what is left out is time taken to time allowed equal to 50%. That means what is the indication here? When time taken to time allowed is 50%, then bonus under row 1 and Halsey will be same. Okay, luckily in this question, time allowed is 10, time taken is 5, which is exactly 50%. So that the bonus under row 1 and Halsey is equal. So that earnings under row 1 and Halsey is equal. Have you understand this? Now look at here. Total earnings as per Halsey plan 750. Total earnings as per row 1 plan 750. When the actual time taken is 50% of the time allowed. Time taken is 50% of time allowed. The earnings under Halsey and row 1 plan are equal. Clear? Next. Cost accounting system. I haven't uploaded the videos. I haven't uploaded the video based on the cost accounting system. Maybe tomorrow or day after tomorrow I'm going to upload the video on the cost accounting system. Look at here. Which of the following is the correct journal entry as you would appear in the cost books when the material is issued to production? Simple. They are asking journal entry for the material, that is direct material issued to production. Direct material issued to production. Entry is work in progress to stores ledger control account. Work in progress to stores ledger control account. From storeroom, we are issuing it to the factory. Factory divided by WAP. So that WAP account debit. 2. Issuing is giving, or receiving is WAP, giving is raw material. So WAP account debit to SLC account. D is the answer. Fine. Question number 5. Look at this question. Very simple question based on process costing. Listen to me. A product passes through two processes. The output of process 1 is treated as the raw material of the process 2. The cost incurred at process 2 is as follows. Particulars process 2. Transfer from process 1 account 27,85,700. Material issued 10 lakhs. Labor 2 lakhs. Manufacturing overheads 5 lakhs. The output of each process is as under. Process 2 is giving the output of 48,750 units and process 1 is giving the output of 48,750 units and process 2 is giving the output of 47,000. They given the normal loss percentage. No stock of materials are of which? No stock of materials are of work in progress was left at the end. What is this point is stating? Raw material work in progress stock is 0. That is what they mean to say. Okay, next. You are required to calculate value of abnormal gain or loss in the process 2. You are required to calculate value of abnormal gain or loss in the process 2. How to do that? Simple. We know the format. Just I am drawing roughly. Clearly given in the material only. Just I am drawing roughly. What will take? Like this, we'll open the process 2 account. They are asking for the process 2. I am opening the process 2 account. In process 2, first we'll write particulars. First we'll write particulars, units, amount. Particulars, units, amount. On debit side, we'll write to process, no stock details. There is no stock. To process one account, two process, one account. How many units are receiving? 48,750. 48,750 received at what value? 27,85,700. 27,85,700. Material, two additional material. Additional, I can write as additional material. How much is that? 10 lakhs. Two labor, 2 lakhs. Two manufacturing overheads, 5 lakhs. This is the debit details. When it comes to credit, how many units is the output by? See, we don't know. Well, it is having only two process. Only two process. By finished goods. We'll write by finished goods 47,000. By finished goods 47,000. Now we need to account the normal loss. How much is the normal loss? 5%. In the absence of information, that 5% will be applied on the input. So 48,750 into 5%. 48,750 into 5%, which equals to 2,437.5. Look at here. 2,437.5. They take it at 2,438. Okay. I'm sorry. They take it to the everything. Just I'm opening the process account. Look at this. 48,750 value 10 lakh, 2 lakh, 5 lakh. Abnormal gain. Normal loss 2,438. Output is 47,000. Now what we need to do? We need to calculate cost per unit. We all know that in the presence of loss, total cost minus normal loss scrap income divided by total input minus normal loss unit. In this question, total cost is excluding this. Excluding this, total cost is 10 plus 17. 44,85,700. 44,85,700 divided by total input given to the process 48,750. We taken 48,750 minus. See, in this case, normal loss scrap income information is not there, so that we'll take it as 0. Normal loss scrap income is not given, so that we take it as 0. So by accordingly 96.858. Using this 96.858, we will evaluate the abnormal gain. 66,626 is the abnormal gain. Yeah, I'm a little bit fast only. I'm thinking that you know the subject. Based on that, I'm teaching this or understanding. So clear cut. If you want the clear cut information about these things, definitely I'm going to upload the videos. You can go through that videos to get the concept. You can go through that videos. Okay. Next question number 7. Question number 6 is based on joint product byproducts. Question number 6 is based on the joint product byproducts. Very simple thing. We all know that what we'll do in the joint product byproducts is just allocation of cost. From the joint process, we are going to allocate to the joint products. From the joint process, we will allocate to the joint products. Look at the question. Sterling Industries manages various manufacturing processes. In process 1, joint product P1 and P2. In process 1, joint product P1 and P2 are produced in the ratio of 6:4. 6:4 in units from the raw material input. Okay. The normal loss is 2% of the raw material input is expected in this process, with losses having realizable value of 12.5 per kg. The company has no work in progress. The joint costs are apportioned between the joint products using physical measure basis, nothing but physical units basis. We have seen there are different methods to apportion the joint cost. Physical units, sale value at split off point, sale value after further processing, NRV. Like that, we had different methods, constant gross margin method. Like that, we had different methods. In this question, what they stated is physical units method. What is happening? They are doing one joint process where they are getting two products. What are the two products? Product 1 and product 2. And they are getting in the what ratio? 6:4 ratio. They are getting in the ratio of 6:4. And apart from that, they are getting some normal loss. They are expecting, what is normal loss? Expected loss. How much they are expecting as a loss? 2% of the input. And they're expecting the scrap income. How much is the scrap income? 12.5 rupees. This is the information given. Now look at this. The following information related to process 1 for last month. Total input given is 75,000 kgs. Value is 4,76,250. Direct labor cost 2,25,000. Direct expenses 67,500. Production overhead 110% of the labor cost. That is 2,25,000 into 110%, you will get 2,47,250. Yeah, 2,47,250. Next, abnormal gain 1,250 kgs. This makes sense in this question. This makes sense in this question. Actually, they're getting abnormal gain. When they will get the abnormal gain? What is abnormal loss? Beyond normal loss. Beyond normal loss. Beyond normal loss means abnormal loss. Abnormal loss is beyond normal loss. Okay, let me write that. When we'll get the abnormal loss means when actual loss. Okay, let me write that. Actual loss is greater than normal loss. Means example, I'll give the example. Expected is 100 units, but actual loss is 120. So this 20 units is the abnormal loss. When we'll get the abnormal gain? Expected loss is 100, but actual loss is only 60. Expected, this is normal loss. Actual loss is 60. This difference is 40. 40 is called the abnormal gain. They're expecting to lose. They're expecting to lose 100. But what they lost is only 60. Understand that 40 is called the abnormal gain. In this question, how much is the abnormal gain? 1,250. That means how to calculate? See how we get 40. 40 equal to 100 minus 60 means I can write abnormal gain equal to normal loss, expected loss minus actual loss. Normal loss minus actual loss. Are you understanding? Now look at this. You are required to calculate number of units and its value of the normal loss, abnormal gain, joint product P1 and P2. So we need to know units, we need to know value. First we'll discuss about units. Listen to me. 75,000 units. Totally 75,000 units. In that we need to know how many units are P1, how many units are P2, how many units are normal loss, and how many units are the abnormal gain. Okay. How many units are the abnormal gain? I'll do one thing. Abnormal gain. Now look at here. 75,000 kgs is the input. 75,000 kgs is the input. 2% is the normal loss. How much is the 2%? 1,500 is the normal loss. 1,500 is the normal loss. Abnormal gain mentioned in the question only. How many units? 1,250 kgs. 1,250 kgs is the abnormal gain. Normal loss is 1,500. You tell me, here they are using the word abnormal gain. Before all these things, you tell me how many products we are getting as the output? Only two products. P1 and P2. What we are getting as the output is P1 and P2. Normal loss, abnormal gain is nothing but loss what we are calculating. Now, abnormal gain 1,250 kgs will be getting output in the form of what? P1 and P2 only. That will be coming out as a good units. See, expect how many units they expected? 1,500 units. Please understand, normal loss is expected. They are expecting 1,500 units is the loss. But abnormal gain, what they are getting is 1,250. What does it mean? The actual loss is only 250. The actual loss is only 250. 1,250 units coming out as the good units. They expected loss 1,500. But luckily, out of 1,500, how many units turned into good? Out of 1,500 units expected loss, how many units turned into good? 1,250 units. So actual loss is only 250. Are you understanding? That means what is happening? Let me take the actuals. See, this is what the accounting. Let me take the actuals. Good units, last units. Last units is only 250. Good units is 74,750. Good units is 74,750. This 74,750 will come out as a P1 and P2 in the proportion of 6:4. See, accounting is different. Actually happening what is different? We need to account normal loss 1,500. Later on we'll adjust that. Are you understanding? So please understand, abnormal gain 1,250 will result in the name of P1 and P2. So as I told you, according to given information, expected is 1,500 loss, but actual loss is only 250. That means out of 75,000 kgs, how many kgs lost? 250 kgs lost. Actual loss is 250. Normal loss is expected. Actual loss is 250. Good units is 74,750. That will be divided between P1 and P2 in the proportion of 6:4. Listen to me. 74,750 into 6 divided by 10 into 6 divided by 10 ಎಷ್ಟು ಬರುತ್ತಪ್ಪ 44850 p1 is 44850 minus 74750 29,900. This is the output of P1 and P2. Look at here. Yeah, here it is. I written here. Okay. Now, normal loss is 1500, 44,850, 29,900, 1500 normal loss. Abnormal gain is 1250. But this 1250 are sitting in the name of P1 and P2. The 1250 are sitting in the name of P1 and P2. Abnormal gain is not separate unit. They're not a separate output. First of all, abnormal gain is not the separate output. We are getting whatever we expected, turned into good units because God is sitting beside to me. I expected to lose 1500, but what I lost you only 250 because God is sitting beside to me. Understanding that 1250 good units or abnormal gain will be lying in the form of what? P1 and P2. So ultimately, what is the conclusion is 75,000 kgs given as input. Actually, lost only 250 kgs. The good units what we are getting is 74,750. That 74,750 will be in the proportion of 6:4. Accordingly, I calculate the units. Now turn to calculate the cost. How to calculate cost? Look at here. Material, labor, direct expenses, overhead. Total it comes to 10,16,250. And again, we are taking the formula. Here there is a scrap income. Whenever there is a normal loss scrap income, this is how we need to calculate cost. Cost per kg equal to total cost minus normal loss scrap income, total input minus normal loss. So how much it comes to? 13.571428. 13.571428. Accordingly, we are calculating the cost. See, normal loss cost. The normal loss cost is 1500 into 12.5. Normal loss cost is 1500. Scrap income. Scrap income is 1500 into 12.5. Cost allocated to normal loss is 0. Okay, now see here. Normal loss 1500 units. Cost is 18,750. How they are getting 18,750? 1500 into value. Value is 12.5. 12.5. Next. Abnormal gain 1250 units, 16,964, 44,850 units, 6,08,678. Here I written. So using this. Question number 7 is based on multi-product break-even point. This is the question based on multi-product break-even point. So in case of multi-product break-even point, first of all, break-even point equal to fixed cost divided by contribution per unit. In case of multi-product break-even point, the formula is fixed cost divided by average contribution per unit. Multi-products means the company is diversified and producing multiple products. All the products will be given the contribution. So we have to take the average. We have to take the weighted average. How to take weighted average means units produced by each product into contribution per unit. We'll get the total contribution divided by number of units. We'll get average contribution per unit. Okay, we'll understand that. Look into the question. What they given? PR Limited sells two types of pens, ball pen and gel pen. Currently, the company is expecting to sell 6,000 units of ball pen along with 3,600 units of gel pen in the coming month. Other information as forecasted is provided below. When it comes to ball pen, price given, ball pen and gel pen, selling price given, variable cost, contribution per unit is given. Fixed cost is totally 3,36,000. You are required to calculate composite break-even batch and individual break-even of the pens. How to calculate this? Listen to me carefully. First we'll take contribution per unit, 60 rupees, 40 rupees. Number of products is ball pen, 6,000 pens, gel pen, 3,600 pens. Now we need to calculate weighted average contribution per unit. How to do that? 6,000 into 60 plus 3600 into 40 divided by 9600, which equals to 6000 into 60. I think 3,60,000. 3600 into 40 plus 3,60,000, which equals to 5,04,000. 5,04,000 divided by 9,600, which equals to 52.5. Weighted average contribution per unit. Weighted average contribution per unit is 52.5. Now, multi-product BEP is equal to total fixed cost 3,36,000 divided by 52.5, which equals to 3,36,000 divided by 52.5, which equals to 6,400. This 6,400 will be bifurcated. This is called multi-product break-even point or composite break-even point. We need to divide between ball pen and then gel pen in the proportion of we can take 1,200 Pfizer, 1,200 Pfizer, 5:3 in the proportion of 5:3. In the proportion of 5:3, 6,400 into 5 divided by 8, 4,000. 4,000 ball pens and 2,400 gel pens. This is the answer. So composite break-even point 6,400. Break-even point units of ball pen 4,000, 2,400. So answer A. A is the answer. That's it. So we're done with the all the MCQ questions. Okay. Within short period of time, I'm going to explain the descriptive questions also. And I'll be uploading, after this video, I'll be uploading cost ledger accounting concepts. Okay. So whoever liking my videos, please comment and please subscribe to the channel and share the video whoever in the need. Okay. Thank you.